Hey everybody, this is Trading Bitcoin. We have Tone Vase. We actually have Tyler on as well. And I'm pretty sure at least you guys are aware of what's going on with the price. Now we had the weekly close and we had Tone on with the most beautiful background. Where's I?
What happened?
What? Okay.
I think I'm back.
It's definitely Oh no, it's with you with the thingy. Hello, Leah. We are live. Yeah. Okay. We have mics. Tell me what's up, Care Bears? Yeah, that's true. Hey, Nick's in here. All right, Tone, you ready?
Hey, why don't we get Nick in here? Hold on.
Nick, we'll send you the link. I can send it to him. You guys are the TA Maestros, and everybody's freaking out. Nick, I'll send it to you in a second. Tone,
I already sent it to him. He's good. We'll see if he joins.
Nick, get in here.
All right, let me pop out the live chat. I mean, I just woke up. It's still like probably 8 a.m. or 7 a.m. I don't even know what time it is here in Sydney. My computer is on New York time, so I actually don't know what time it is in Sydney. I woke up, it was before 7 a.m. It was like 6:40 or something. And I look at the price and I'm like, shit, we're in the 4,000 range. All right, let me, let's go straight to screen share. I have not looked at the charts at all. The last time I looked at the charts was when all of you guys saw me look at the charts, and that was the last video. Hey, Tyler, I'm actually glad you're on because I do want to talk Hyperwave today. This is good. It's going to be very good. Well, yeah, and we got 3 hours before we get a new, before the BLX index updates our monthly candle, which is going to be very interesting. I'm dying to see that. Though I doubt would be, I don't want to be on for 3 hours this time.
I don't know about a 3-hour stream or 8 hours again.
Yeah, I know. It's okay. Here we go. So, right. So it looks like, okay. Hey, Tyler.
Yeah.
Here's a question. The Fibonacci line. You're an expert at all things TA. I think you've researched them all. I'm surprised you don't have a CMT. Have you ever thought about taking that exam, or is it just a waste of your time?
No, it really is. I've had 2 or 3 people that work for me get it, and my assistant down in Princeton, New Jersey's got it. But basically, you know, it's like the CFA. I taught 6 or 7 people and signed their things, and they all got CFAs, and everybody wonders why I didn't. Because basically I had learned all that stuff, you know, for years and years and years. So I just didn't want to waste the time.
Hey, Tone, Nick's in. Or at least you have dictatorial powers over him right now.
No, I got him. I got him.
This is going to be a fun one.
All right, Nick's in.
Tone, Tyler is a super fib maestro. You should have him talk a little bit about fibs going on right now.
Hey, Nick, thanks for joining, man.
Hey, guys. Good afternoon, morning.
Hey, Nick, how you doing?
Good. How are you, Tyler?
Great.
Good. We're all set. Where are you these days? Are you still in Miami or what?
No, I'm still in the Midwest. I'm going to be in the Midwest for the next couple months. I'm just kind of in isolation mode, working with no distractions. Miami's way too distracting for all that.
Oh, yeah, no, I know. We're hanging out there. Okay. Actually, that actually solves my little problem. Well, it wasn't a problem. It was, so I'm doing my workshop in Aruba, and then the following weekend, I'm doing my workshop in Tampa. And I'm like, man, I got to swing through Miami to hang out with Nick, but I can maybe stay there for like 1 or 2 nights. That's really not enough to get into trouble. But if you're not there, it solves that headache for me. This way I could just almost go straight to Tampa.
Yeah. I'll be in the, I'm clear out in the countryside in the middle of nowhere in the Midwest right now. So pretty boring.
That's good. That's good. All right, let's get to the charts before like everyone in the live stream. Man, I wish George Samman can join. Come on, George, get in here. I've never had you on this podcast yet. I'm going to talk about your article again. Anyway, all right. So, hey, Fibonacci question. 76.4 or 78.6? This has been like a huge controversy over here. See, because when I started using TradingView, it was like the early days, and they had 76.4 as the default. And somehow that is still the default on all my, because I never changed it. And everyone is yelling at me, telling me that it's supposed to be 78.6. But in all of my charting of Fibonacci's, the 76.4 happens to do a better job at bouncing prices. So, like, I don't want to put them both down. They're too similar to each other. Any thoughts, Tyler? You're probably you're the person to ask.
Yeah, actually, the 78 is the correct one, just mathematically. The way all those numbers come about is just by dividing one Fibonacci number from the other, and what they are is all of the relationships. It's asymptotical to what the final number is. So when you go, 1, 1, 2, 3, 5, 8, et cetera, et cetera, et cetera, and you get bigger and bigger, once you get really big numbers and you divide the last one by the next one, you get closer and closer to 0.382, 0.5, 0.618. And then you've got the inverse of those if you divide those numbers by 1. And so if you take 38.2 and divide it and multiply it by 2, you end up getting 764. But if you run the digits out far enough, you'll see that this thing called PHI, which is the golden number, is 1.618. That's what everything is based on, 1.618. And then by doing the math, you get all of these different sequences. So I have seen, just as you have, both 76.4 used and also a 78.6 and a 78.3 and a 78.4. They're so close that in terms of what's actually working, you said it yesterday or the day before, it doesn't matter. But for a purist, once you get out to, it goes 13, 21, 34, 55, 89, 144, 233, 377. And as you divide those numbers out, as they get bigger and bigger, it gets closer and closer to these ratios. And that's kind of the answer.
Gotcha. Oh, wow. We are falling further. Well,
Yeah.
We are right at this here, the 4789 number, the 76.4. This was the combination of average and the combination of moving average and that Fibonacci line is right at 4780.
Is that the index, Tom?
Yeah, that's the index. It's going to update in about 4 hours, unfortunately. Yeah. Here is Bitstamp. We've now blown through my point. To be honest with you guys, I think this is a pretty big drop, 2 weeks in a row. And I am looking for a bounce here. Oh, why isn't this updating? Oh, because that's the BLX. That's the index as well. Okay. So I am looking for a bounce. Here's that daily on Bitfinex. I do need to switch to Bitstamp, but they're in line now. Tether is back to normal. I'm looking for a bounce right here. I know we're not on my sequential stuff, but this is a big drop. Somewhere in this vicinity, I'm trying to find a chart. We're almost, here's an aggressive 13 and a 7 on the 4 hour. I wouldn't chase this falling knife, but I'd be looking for something to cling to. On the hourly should be a 913 literally in 3 hours. You're on a 10 sequential and a 6. So if it continues to fall over the next 3 hours, and I know this is Bitfinex and not Bitstamp, this chart, I can probably move it into Bitstamp. Let me see here. Cryptocurrencies. I'm just gonna go through this real quick and I want to get your thoughts. Bitstamp is here. Tell me it's a 610 as well. No, it's not even close. These things are so misaligned. Like it's really hard. Man, I do think that somewhere in this vicinity, like 4750, 4700, 4800, I think that a bounce is coming. I think that this selling will end quickly. Whoa, why are people going long like crazy right now? That's not smart.
I mean, we're kind of at a key point right now. We're getting there. This whole
Yeah,
range.
but then again, I would be looking for it as well. So yeah,
On
I think this
Fibonacci.
waterfall is gonna end like any hour now. I'm not gonna say any minute, but probably within the next 24 hours, maybe 48, we should swing up. I'm not expecting this to last. Let me stop screen share and get your general thoughts, guys. Like, there's nothing else to say. Like, it's falling. Like, what else can we say? Like, there's really no TA that can be done other than, hey, this purple channel was basically everything for me for a year and a half back in 2015 and 2016. And we're back to hitting the bottom of that channel. And I think that's relevant. And we're almost right at it. And that's assuming I drew it perfectly. We could have hit it already, or we could be further off. I think that's a reasonable place for a bounce. Way oversold with the moving averages. Yeah, I think we're due for a bounce any day. How high can the bounce be? It's really hard to say because now I go back to the daily triangles back in that 2015 or 2014 2014 year period. And I don't think we're going to bounce all the way to 62, 63. It's possible, but I don't think so. And I bring it back to this situation where we crashed hard out of the triangle, reached the target, went back up, never made it back to the bottom of the triangle, never made it back to the moving averages, made a new triangle, and then we really dropped hard. I really think this is going to happen. I think we can maybe bounce back to that $5,800 range, maybe 6,000, but I think we're going to fall short of the bottom of the triangle. We will then consolidate with 5,000 being the floor, and then we're going to drop down hard. And the other question becomes, again, George Samman, who is here in Sydney, I've been trying to connect with him, but can't seem to. I only got, it's my last full day here. And he wrote this article on capitulation. It's really good. Please go and Google it and read it. Here's the title. It was written back in 2015. It was written about 3 or 4 days before the capitulation in Bitcoin the first week of January. And I think we're in this like panic phase and capitulation is still coming. Now, the despondency phase doesn't have to give you a new low. Capitulation can give you a new price low. Despondency phase could be the dragged out shitty price action at the end of a trend. So look for capitulation or despondency to bring you a new low. But right now, I think we're just in the panic phase. This is where, you know, people like Mike Novogratz and like the hedge fund guys, this is where they're deciding what are they going to do, because clearly it's not doing what they expected. And they have.
Did you see Tom Lee's reasoning for the drop? He's blaming all the Bcash drama. Speaking of hedge fund guys,
are you guys blaming the Bcash drama? Because I'm not. It's already irrelevant.
No, not at all. I believe this is completely natural. I don't even think we're. Yeah, he's just. He put a target of 25,000 by the end of the year, and now he's lowered it to 15,000 by the end of the year, which I still think he is completely clueless if he thinks we can hit 15,000 by the end of the year. But yeah, he's blaming the Bcash drama for having to cut his target in half.
I'm not. I
Sorry.
got dinner plans with him in Singapore next week. That should be fun.
Tell him he doesn't.
You had a fun interview with him when you were in Vegas. Tyler, thoughts?
Yeah. Yeah. I mean, I'll be happy if we're above 5,000 by end of year.
I think we will be. I think we will.
Yeah. All right. Nick, you have anything to share for us before Tyler
I'll
and I
share some screen.
Hyperwave?
Yeah, sure.
I'll stop my screen share. Go for. Oh, and Leah, we had a question from that with a Russian rubles tip.
Yeah, I like the Russian ruble one. All right. I'll read it straight. Oh, hold on one second. I got next screen.
I know what. Let's do Nick's charts first, then we'll do the question.
Done. They're pretty.
Yeah. So I'm typically not a fan of lines when it comes to candlesticks, but I needed to filter out the noise to kind of take a look at where everything is, because we had, like a major dip back here, but it just didn't make any sense back to me back in 2014, I think it was, if we turn on the candles, actually 2015, this right here. I think we're seeing the same type of deal. And let me go back to line, back to Fibonacci. What's that?
Yeah, Nick, to me, the current move looks like the October move. You see the two spikes right to the left of your 212? Yeah, I think we're seeing the first of those two spikes.
I do not, and I'll tell you why. Back to Fibonacci. For one, Fibonacci retracements are extremely subjective, like where you place them, and the accuracy of them is not very high. But looking back at this bear market here, we practically hit the 78 retrace point right here. I mean, if I zoom in here and put it on line, if I put it back on candles, we wick below it. But if I put it on the close there, I mean, we got pretty damn close. This was at 212.05. Now, fast forwarding to our current price action, we're pretty close to that. And I've been actually eyeballing this Fibonacci level since clear back in, April, as a retracement point. I was off on the timing. I typically am off on my timing. That's where I struggle. But I wasn't expecting it to happen then. But I think it was somewhere around here in July. I was looking for a bottom at this retrace point. But once I've turned off,
I was expecting 5,000 in July.
Yeah, so I think we're close. For one, this area was massive amounts of volume came in throughout the 4,000 range. Back when we first crossed it, I think it's heavily defended. If you look at the books now, especially like on Coinbase, which is noob central, there is tons of money stacked up around like 4.5, 4.6. I expect this to be heavily defended and the 4,000 range to ultimately be our bottom. 42.72 would be a nice wick down into there. I think 3,000 is not off the table, but highly unlikely. I know you have a higher percentage on the likelihood of 3,000. That's where I placed this pink line, because to me, it is possible. I just don't think it's probable. I think 4,000 range is too heavily defended. And I think we see now that we're finally down here, even though we're dropping really fast, I think we see some ranging down here for quite a while, especially in the next couple of days. I think we attempt to range back up into the 5,000 area and then ultimately reject and then come back down. And this will be long and drawn out if we do end up dropping below this 42.72. I think we stay down here for months and months. But if we do end up holding at this fib level or slightly above it, which is more realistic to me, probably around 46, then I think we can see in Q1 the first signs of a bull. Let me exit out of this real quick and get over to some actual candlesticks. Throw my... Ultimately, for a while here, I've been looking to get off of this base that we've been sitting at with the RSI and the weekly for quite a while. We finally got it on those last two drops. And if we go back to the last bear, here's our last bear. We did wick off of that, or I'm sorry, not wick, but we did bounce off of that oversold level right there. I am not sure we'll quite get that far. If we range in this 4,000 area, it'll allow it to kind of level out somewhere around here at 32. Any more sudden drops and we can get all the way to oversold. But I think this weekly RSI has been key And I've been waiting for this drop. That first drop over 6,000 was actually made me kind of happy, just under 6,000, because I just didn't trust a bull market from there. This last weekly candle, if we never bottomed our RSI. Additionally, one thing I'm looking for, let me throw on your indicator tone. If we flip over to the Fibonacci candles, which for those of you that don't know, filter out the noise.
Yeah, I've been meaning to you know, show this indicator with Fibonacci. And you know what else actually? After you go through this, check out the regular candles, but on a 31-day candle. It's actually also very interesting.
Yeah, will do. So yeah, we're on an 8 here. I am looking for us to range throughout this month, and then in December ultimately begin to get a reversal. I don't think we'll get a green one initially. I think it'll be slow. But I think once we end up crossing 10,000, which if we go back to the weekly real fast, turn on the Ichimoku.
Whoa, where are we bouncing, or is this the Fibonacci thing? This
is Fibonacci.
Okay, that's why I'm like, wow, it looks like a bounce. But
yeah, let me go back to this real quick though. Our last bull, turn off log here. Our last bear. I think I sent this to you last night, Tone. I don't know if you got a chance to look at it.
Yeah, you did. I saw that. Hey, I'm gonna be on the next CNBC as well. The crypto trader. Are you on that one? Are they interviewing you?
Yeah, I film. Hold on, I gotta move these. There we go. I can't.
I was supposed to film late last night, but I think we're doing it today.
Yeah, I do it tomorrow morning. I film bright and early.
I do it tonight. Yeah, I'm like 16 hours ahead of you guys.
Yeah, it'll air Wednesday, I believe. All of us. I need to move these cameras somewhere. Okay, there we go. Yeah, so here's our last bottom. Are we still in Fibonacci? We are, aren't we?
Yeah, we are.
Here's our last bottom right there, which is that January was pretty key, but we ended up getting that 9 reversal, and it ended up doing exactly what the TD does. So I'm looking for something similar here. I really like how the Fibonacci filters out all the noise that you get with traditional candlesticks, because if you look at the monthly now, it doesn't really tell us much. But flip on the Fibonacci.
Look at glance at the monthly. Go to the monthly.
I'm on the monthly.
The candle, set it to a 31-day candle. Like on the regular, not a Fibonacci. So you can choose at the bottom, go regular candles, and then flip over to at the bottom and just make it 31 days.
Yeah. Yeah. Interesting. Very interesting. What made you flip over to the 31-day? Let's look at
no, nothing yet. No, I got in my group former, you know, consulting clients and workshop attendees. One of them has been like telling me about this charting forever.
Yeah, that's interesting. Let me yeah, that is a huge difference there.
Right.
But,
I didn't think
a number of reasons why I am looking for a bottom here, this, and then also Fibonacci levels. And I'm still getting into the volume analysis. Hopefully I'll have enough time on CNBC to get into it, but there is a shift in volume, and it's actually been happening since clear up here in the 6,200 range. It's not quite enough to pull it out. Obviously the bears are winning, but between that, Fibonacci, a bottomed out RSI, exhaustion cycles, I think we are close. I think a 3,000 would actually be capitulation. I don't even think we see it. I think this is a completely natural retracement. There's no difference in the fundamentals between now and the last bear market. I don't see any reason why this point, this price level wouldn't reverse here. Again, we're going to range for a while, but ultimately, you know, we'll break out of it. And I am looking for everything to really take off here. Let me throw this Ichimoku back on. I'm looking for everything to really take off around here at the top of this Kumo. Not exactly this time right here, but for blast off for Bitcoin, I think it's a slow eke up to the top of that Kumo. And then once we do end up breaking this flat Kumo right here, all hell breaks loose up until around 20K, where I think we'll be rejected for a little bit. And then ultimately, once we break that, again, all hell breaks loose like the first time we crossed 10K. That's quite a bit forward in the future, but that's kind of what I'm looking at as I gather my analysis and set my trades for the year.
Hey, Nick,
Yeah.
question. Oh,
Go
yeah.
ahead. No, go ahead, Leah.
From live chat, just since you have it up, why do you think that Ichimoku clouds are not subjective when before you said that fibs are?
Okay, so there's a number of places you can place a fib level, right? You're supposed to find your swing low to your swing high. It's all dependent really on where you want to place it. You can come up with different numbers as Tone has compared to my Fibonacci levels. I struggled to find an exact point that I was comfortable with. That's why I ended up putting it online to kind of filter out these wicks and more focus on the closes. As for Ichimoku, it's not really subjective because you're not placing it anywhere. It's the same with Elliott's. You're placing Elliott's, so there's a number of ways you can place them. Elliott waves are generally bullshit, but if you know what you're doing and you really study and take your time, you can actually map out a good portion of the crypto markets with Elliott waves. I use a style of volume confirmation to map out my Elliott waves. I did have Elliott waves pulled up earlier, but on that chart with the line, but I pulled them off because I just didn't want any, it didn't matter for the point I was trying to make. As for Ichimoku, it is a lagging indicator. In a sense, it's a series of moving averages that's been displaced 30 points ahead. And it also, yeah, it's the median of moving averages. I don't know if that answers this question or not, but.
Thanks, Nick.
Yep.
Any last thoughts on what you're up to, what you're showing us?
No, I mean, I'm going to publish a pretty thorough analysis on why I feel the bottom is nearing and why I feel real capitulation will never take place. It's not going to be my typical analysis, you know, with your indicators and things like that and things I showed you. I'm trying to get pretty in depth. I'll touch on it a little bit on CNBC, but in the next few days, I'd like to have that published out. The more I dig into it, though, the more stuff I want to cover and the more work I find I need to do to prove my point, because I want to, if I'm calling a bottom, I want to be able to definitively prove it without much argument. And I'm not quite there, but I'm getting close. So it doesn't have to happen. Our bottom doesn't have to happen here. But as with all technical analysis, you know, you take the data you have in front of you and you form your best conclusion and present it and base your trades off of that. And so far, the data I'm seeing in front of me, I am seeing a slow shift. Yes, it does look like panic mode on these last couple weekly candles, but this is a good thing. We've done this before in the last bear market, and it tells us a lot when we make these major moves.
Awesome. Before I turn it to you, Tone, Nick, you got a $5 tip saying that you are the GOAT, greatest of all times, and that he wants for you to hodl him. So just, or her, it is Josh, but you never know these days. So I'm just putting that one out there.
I'm guessing Josh is a man. Actually, no, that's one of my friends. He's one of my analysts in Bitcoin Masons group that we have, which is a free group, not a paid group or anything like that. But we have about 30 analysts in there, and he's one of the leads on that.
Nice, nice. All right. Well, Tyler, gonna turn it to you for Hyperwave. Tone, what are you thinking? Is that an okay next segue?
Yeah, I know. I want to answer that other guy's question about the ruble question. Yep. And then I want to do my screen share. All right, Nick, are you off screen share? You are, okay. And then I wanted to do a little bit of CMF, and then we'll move over to Hyperwave.
Let's do it. Here's your question. For those who wonder how much, okay, 670 rubles is, it's about $10. My question is, do you think Bitcoin is oversold now? And is there a short-term correction upward ahead of us? Thanks for your great work.
So I'll take it first. Now, I do think that Bitcoin is very short-term oversold right now. That doesn't mean we're not that doesn't mean we're long-term oversold. I'm not on the same page with Nick yet that the bottom is near. I still think that 3,000 is more than 50% likely, and there's still a chance at $1,000 to $1,500 range. So I have not. I'm not looking for the for the ultimate low to come in the 4,000s. Now it can happen. And if I see signs of it in TA, then I'll say, hey, maybe we bottomed out. Now, my whole thing about this bear market, as long as we come back to 49.75, after that, it's just time to try to properly call where it ended. Like my whole thing was, like, if this bear market did not go below 5,000, I probably would have felt pretty stupid next year. Okay, below 5,000, I guess everything I've been saying for the last 9 months has been vindicated. But now the hard work begins. When do we bottom? Can we time it? Because Tyler is the most bearish of the three of us. He's looking at 1,000. I'm probably the next step. I think that 2,500 to 3,000 is a reasonable, perfect bottom. With 1,300 as the worst case scenario. And Nick is above me, thinking that like 4,200 is the perfect bottom. So to answer the specific question, are we oversold and due for a quick bounce? The answer is yes, but you can mistime it. Like if you bought in big at 4,800, we can still swing to 42 in the next 24 hours and then be back above 5,000 in the next 24 hours. So just because Bitcoin is oversold and is due for a bounce doesn't mean you can time it. They're very difficult to do. And right now I'm not even looking at charts. I'm looking at you guys, which is great. But so that's kind of my view on it. The answer is yes, but it doesn't mean that it's tradable.
Okay, Tyler, did you want to chime in before we go to 10's charts?
Yeah, just to say that I disagree with Nick in terms of the fundamentals being the same as before. I think the fundamentals now are cannot get any worse. And a big part of what we are seeing now is that fact. The fact that when we were in that triangle, volume kept getting lower and lower and lower. And even on the drop, the break at 6,000, there was no volume on that. Because I think there's general recognition how screwed up the fundamentals are, not with Bitcoin, but Bitcoin has nothing to do with this discussion or the fact that it's dropping. It's that there's all this other crap out there, and until that 2,000 disappears, Bitcoin's going to keep falling and falling and falling from the point of view of lack of interest by all institutions, everyone else. So I always try to look, hyperwaves are so rare that there's always some big macro thing going on, and none of the other cryptos have been in hyperwaves. This time, and Bitcoin was not in a hyperwave in its first two little bumps up to $1,000. This was a real hyperwave. So what was different, and what is the big macro thing that is going on? Well, the big macro thing for the first 7 years of Bitcoin was Bitcoin. And that's what got everyone excited. Everything that has come, the last 2,800 crappy projects that ran against all the regulations worldwide and now are faced with it, but have not been punished for it at this point. They will be, and it's not going to be next week or next month. It's going to take all of this year and most of next year. And throughout that period, the world, meaning the media, the regulators, all of the politicians on a worldwide basis, the central banks, aren't going to touch Bitcoin with a stick. So the only thing you're left with fundamentally are a very small number of early adopters. Max Kaiser, whose average price is less than $5, is never going to sell. But that's a tiny portion of the people that forced this thing up all the way to 20,000, which it never should have gone to. So from a fundamental point of view, until all of that changes, which it will, and it's not going to take too long, but it's going to be well into next year, we're going to see lower and lower prices. I think Tone is right that 3,000 is a given for me. But I don't think it can hold 3,000. I think it bounces for kind of like Nick was saying off of these levels. I think that's what we see down at 3,000. Just because of all the people I talk to that keep looking at that left side of the chart and saying, look how long that took place and how strong that really is. And there's just an awful lot of people that are expecting it, which means I don't think it's going to hold. I think we'll go through that too, and then we'll see what happens after that. The other thing is that I don't have a timing tool. You guys have got great timing tools. I don't. Hyperwave doesn't time anything. It just tells you when each phase is over, and in this last phase, it tells you where you get to the end point, and the end point's 1,000. If not, this is the first time in 350 of these that hasn't gone back to its beginning point. That doesn't mean it's not going to do it. But with what I just said fundamentally, which almost everybody can disagree and probably does disagree with me, I just felt all the way through this thing when I started mining and found out what Mt. Gox was all about, and then found out that nothing has changed over the last 6 years. It's gotten worse and worse and worse and worse. Every one of the non-regulated exchanges. And until that,
what is it that's gotten worse?
The inability to trust what's going on behind the unregulated exchanges. BitMEX, it doesn't matter. Gemini maybe because it's now regulated, but there's no money going into it. It's all hidden in strange places.
Gemini is regulated. I mean, BitMEX isn't really an exchange. There's actual no supply and demand on there. It's just perpetual swaps. I don't even consider BitMEX in with any kind of volume, but isn't Gemini a regulated exchange?
Yeah, that's what I said. That's what I said. Gemini, because it is regulated, but there's no volume on it. All of the volume is on Coinbase and, buying all these other places, and nobody knows what's going on there. Nobody, meaning the regulators, don't, and none of the investors do. That's why things like what happened with Tether can happen, and everybody looks at each other and points and wonders, and nobody knows. So, that's just a personal thing. I couldn't prove any of that if I had to. It's just that I would never buy or sell on any exchange, and I've never bought Bitcoin, and I never will until we get through this mess. I just use GBTC, and it works great for me, and it's regulated, so that's great. But what's happening now is this implosion. How many people thought it was going to drop below 6,000? On a percentage basis of all the pros, you, me, Tone, and 3 others, everyone else, and all the technicians, Haijin Lee and Phil Cohn, and it doesn't matter. Nobody thought from 20,000 down that this possibly could go as low as 8,000, 7,000, 6, 5, 4. And that's still the way we are today. I thought on the break of 6,000 and my phase 2 line, we would have enormous volume and capitulation. And there was nothing. It was just a big zero. That tells me, and what Tone just brought up, the number of net longs, everybody is still, we are nowhere near fear and despair. We're nowhere near that. We will be down at 3,000. So anyway, that's my view of the world.
Nick, response?
Also, by the way, the market cap is now 163 for the entire crypto, down from 205 just 4 weeks ago, down from 185 2 days ago. And most of the other cryptos are on their way to zero, in my opinion. Most of them are down between 12 and 28% in the last 2 days.
John?
No, I'll let Nick respond. I was just gonna say about the longs. like I just glanced at those longs and I'm like, look, I'm expecting a bounce here like everybody else, but I'm going to wait for that bounce. I'm not going to try and guess where it's going to be. I think all of those people that are going in long right now, they all got to get liquidated first, which is why I'm like, shit, I saw those longs and I'm like, oh, there goes my 4,800 reversal. Maybe it's going to be 44. Maybe it'll be 43. Maybe it'll be next 42. But all of these people that are catching this falling knife, they're doing it prematurely. You got to wait. The price has to give it to you.
Oh, yeah. I just got off one of the groups I was in before I came on here, and they were all talking about longing it from here. And I said, do not. My opinion is do not long from here. Let the trade present itself. This is very choppy waters. The bottom is not in. This is not a place where you long anyway. Let it settle and let it chop up. But I got a question for Tyler. So you've actually never owned Bitcoin? Is it?
No.
Okay. Secondly, you had said something about the fundamentals of Bitcoin and referred to volume. What type of volume are you talking about? Transactional volume or exchange volume?
Well, both. To me, volume is a derivative of fundamentals. It's not a fundamental itself. To me, there's very few fundamentals in the crypto world other than mining, hash rates, transaction costs, number of players, who monopolizes what, and the structure of the way things are traded between banks, wallets, and exchanges. To me, that sums up everything that's fundamental about this particular space. I can't study any of the fundamentals that I've done for every other asset class, including things like precious metals in this space, because I can't trust any of the numbers, which is what I told Willy Woo. I love his work, but I can't trust the numbers he's using because he can't trust the numbers he's using, because everyone in the space lies about everything they do, about how much is going through, how much of it is their own, how much is it a group of people working together to move price up and down, to pump and dump, to hide things, to hide costs, to hide the actual amount of mining, answering questions like what is the average mining cost? And the numbers you get from quote unquote experts are just unbelievable. It just wouldn't fly in normal security work.
Do you know Ronnie Moas?
No.
Okay, never mind then. I was going to ask you a question about some points you had made.
So I'm going to jump in really quickly, and then Tone, we'll throw your charts back on. Okay, for the record of Tyler and my background, regarding owning, Tyler has, I believe, quite a different understanding of what we talk about when we talk about being hodlers and also owning Bitcoin. He did mine all the way back in 2011 and then held on Mt. Gox. Got his head handed to him. Gonna be honest with that one, partner. Love you so much. And but always, and we accept our services in Bitcoin. But regarding trading, given when the security came out, because we're money managers, and Lucid Investment Strategies and asset management firm, the only thing we can throw our clients' accounts into for 401ks is GBTC, which totally sucks, except for when Tone does a really good trade on it. But just so everybody knows, we absolutely have skin in the game. It's just we've been out, and we did get out at 17.8, and did a couple interesting things since. If I could jump in for 1 second and have everybody hate me as well, I do come from a fundamental analysis background, and y'all TA people definitely go over my head most of the time, especially your Ichimoku clouds, which is why I'm trying to learn them so desperately. Please come out with courses, Nick.
I had a course. Didn't I send that to you? I swore. Let me check, but I swear I just did a class on the Ichimoku. By the way, the Ichimoku, for everybody that's wondering about, it's not a God indicator. It's great. It's still lagging. There is a lot of good signals on it, but from a technical point of view, I have better indicators that I like. Anyway, I got a course on it. I'll send it to you.
Nice. All I was going to say is just when Tyler was talking, and we were all on the stream for the Bcash fork, what I did find very interesting, and I wish was addressed a little bit more, was just simply that I feel like we could have seen a mile away of how to trade And by marrying TA and FA, which is something that I don't see done in the space as much as I'd like to see, just the blatant manipulation is, you know, every single asset class in history has been manipulated. I mean, that's a given. Look at Wall Street, especially look at when you talk about ONG and trading a commodity, and you know exactly what's happening in the pipelines for private equity or anything under the sun, or a hedge fund, you know, let's say Third Point as an example, buying out Fanuc, right? And it raising its price in 2 weeks, 14%, right? There's blatant manipulation everywhere, but I'm not saying Third Point has manipulated anything. I'm just saying that you're able to follow the fundamentals, and through such centralization as damn B-trash, especially on what was happening and what's been happening. You know, I do think that married with your guys' TA of what price points to then clinch all the trades is something that I don't, you know, it's not quite spoken as much about, but I do think is quite interesting. And I think when Tyler talks about Hyperwave and Consensio, and partner, please destroy me if I'm getting all this wrong, but it actually does marry FA and TA in a really interesting way that's not always talked about, but obviously following when to get in and out and understanding the markets regarding an investment strategy rather than your guys' trading strategies. It's both, but it's really from the perspective of money management and investing. And so that's where I think, you know, if we're talking about today, which is nuts because it fell under Tyler's phase 2 line, which is why he's the bearish on the show, is because the next phase 1 line is around 1K, which is scary. But there's also, I think what Tyler was talking about, or similarly talking about, is that there's fundamentals at play, and people in the live chat were hating on us for saying that. But a lot of the fundamentals being, and I'll stop this tirade, is just that institutional investors are backing out. All these major investors are backing out. Exchanges are being hacked, right? I mean, it goes on and on and on and on. And now we have this downward trend, and it just doesn't make sense. And then one thing I'm going to add to you guys at the end is a lot of people do want you to talk about traditional markets, which are also bananas today. So if we talk about just, you know, besides volatility chasers who are having fun, and you, especially Nick, slay at volatility and just making money on all these alts and Bitcoin and just being incredible at it. You know, they would institutional investors and high net worth individuals have enough to worry about in traditional markets, in my opinion. You know, and if you look at them, they're taking way out of, you know, net long exposure into shorts. And even you can see that in hedge funds quarterly earnings. So like, why would they even touch Bitcoin right now? And especially with this now crazy bear market, at least Bitcoin's not being boring, but it's not in a good speed. I will stop myself now. Anyways.
Can I say a couple things? So for the people commenting on my comments and Tyler's comment, look, a good analyst is always open to new scenarios and new strategies and new theories. I'm not discounting, you know, anything Tyler's saying. Tyler's been around for a very long time. I just saw some comments in there that kind of bugged me a little bit. And there's a lot to learn. You know, I don't know anything about Hyperwave. I'll be honest. I've never studied it. I think you guys had sent me an invite to the Telegram originally, but it wouldn't stop pinging. I couldn't turn notifications off, so I didn't really get to catch up on it. So I had to leave because I couldn't get it. It was just like ping, ping, ping every couple seconds. But, you know, a good analyst is always going to be open-minded and not be set on one theory. So for the comments in there about, you know, look, I understand, or I have my theories and Tyler has his, and that doesn't mean that, you know, I'm completely discounting them and I don't disrespect them. Tyler knows what he's talking about, and I realize that, and I also know what I'm talking about. We can have difference of opinion on things.
Right, and guys, don't forget, if the price does go below Nick's levels, he's going to change his mind of where the bottom is. Like,
yeah, that's the thing with TA is, like, you take the data you have in front of you. I analyze it one way. The data I have in front of me has given me my conclusions. And to be honest, my theory isn't completely done on this bottom. I still am looking for a couple things to prove this. But yeah, if we approach that bottom and pass it, then clearly I'm wrong and I need to change it and look at the new data sets that are in front of me. So that's just the nature of it.
You don't even have to, it doesn't even have to pass that level. Like if it gets down to your level and you don't like the way it's getting down to your level and you don't like the way it's behaving as it gets down to your level, you can always alter your view at that point in time.
Yeah, that's the thing is technical analysis. Nothing is set in stone. You take what you have in front of you and you make your best conclusion. There's not a single analyst in the world that's been 100% right. Not one. You have to take the data you have in front of you and adjust it.
All right, let's go back to screen share. I don't want to glance at the price of Bitcoin. Also, again, I'm going to point to an article by George Samman. I think I sent it to you guys in our chat. He wrote an article explaining the Ichimoku clouds. George Samman is a CMT. We mentioned that earlier on this show. And he was a charter market technician. He did trade for a hedge fund. So he does know what he's doing. And he wrote an article trying to explain the Ichimoku cloud. I never really took the time to learn it, but I do like the Hyperwave thing, which is what brings me next. But before Hyperwave, so here's the other thing I was going to say. Right, so this is all of the knife catchers right here trying to get in. And now when we say, hey, this is a good time for a bounce, like, but the range is like 4,000 to 5,000. We are talking about $1,000 range on potentially a $4,000 asset. So you are talking like a 25% difference here. So if you are going to try and catch the falling knife, you better do it at 1x or 2x. I wouldn't even go 3x leverage on this. You really don't want to get whipsawed and stopped out. If you're going in to buy at 47.50, you better be able to hold through it going down to 4,200 over the next 8 hours. Because that's your, I mean, like if I was going in to buy right here, my stop loss would be under 4,000 bucks. Like I would give it that much leeway on this bullish trade, and it looks like now it's starting to look like the bottom might have been in at around just under 4,700, and that seems very, very reasonable to me. I still want to see a reversal candle. I can jump down to the 10-minute candles. I used to love the 10-minute candles, and here it is on a 9, I guess. And would have been nicer if it was one candle earlier, but you don't get them all. But look what happened. Look what happened on 10-minute candles 2 hours ago. We had the same thing. The 8 candle was the reversal candle. It was the first bullish candle. You had your 9. You got your 1 to 4 candle reversal. And now you're in the countdown phase. So the same thing could be happening. I mean, unless we can clear the prior swing high and the prior setup trend line, even though we have a new setup trend line now. So unless we can clear 4,900, I mean, there is a bullish trade here, but if you were able to time it, looks like a lot of people were trying to buy right here. Look at the big volume spike, much better than here, right? This is a much better opportunity for a bounce. I like this volume spike. We didn't have that over here. And we did have it up here off the reversal candle, but that faded quickly. But you got to let this 10-minute candle play out. The moment we start trading back at the 47.20 area, it's over. Like we're going to go back down. We're going to complete the countdown. Maybe we'll get another 9. This was a strong buying, but it's already being faded. Like you need follow through on the current 10-minute candle. I don't like this at all anymore, and we might be going lower. If I was buying right here, I would be at 1x or 2x, and my stop loss would be down at 39.50. Like I would leave it that much leeway, and I'd probably take my profits above 5,200. So hey, so here's the two things. Here's what I wanted to talk about before we get to the Hyperwave stuff. I wanted to talk about, but I don't see Nick, so I'm not sure if he's hearing me because this is more in his domain.
He's going to be right back in 5.
Okay, cool. So maybe let's do Hyperwave then. Ironically, the one that, so Tyler, so here's the thing, right? So you're saying that it broke phase 2, but when I drew my Hyperwave like a month or 2 ago, I decided to draw it with a different phase 2. And I know you disagreed with me, but the phase 2 that I drew for the Hyperwave, and the next candle is not going to update, for another 2 or 3 hours or so because I'm using the index. It's just that I liked it better. And I know your reasons that this phase 2 did not take a long enough time to develop, and this phase 2 is at a slightly lower angle than it should be. But I kind of liked it. I liked it because this was a very critical area, I felt, in Bitcoin's life, because there was so much skepticism going on in Bitcoin in the latter part of 2016 and the early part of 2017. This was the Chinese exchanges go and get shut down by the Chinese regulators. This was the rejection of the Bitcoin ETF by the SEC back in March. This giant red candle was Bitmain announcing they don't want to do SegWit and they want to do big blocks. I mean, this area was so critical, and it had such pessimism in Bitcoin, even though I was bullish because TA was telling me to be bullish. This is where Vinny Lingham had that famous article saying he's out 90% of his Bitcoin and it's going to fall to $300. And then we set off the giant bull run from there. This was the $3,000 top. So the way I drew the hyperwave on Bitcoin, I did it differently. I actually drew the phase 1 line a little bit lower. I drew the phase 1 line around 5,600 because I felt that was a very critical area as well. It held the price back during the halving. If you say that wasn't the hyperwave back in 2013, which I felt that it probably was a hyperwave back in 2013, but you're saying it wasn't, then I'm not finding this to be all that critical. So I drew my phase 1 closer to 500 than to 1,000. And this purple line was actually my phase 2. And this green was my phase 3. And that final one was the big phase 4. And the way I had drawn it, I have phase 2 right now at about 2,000. That means going into May of next year, my phase 2 is going to be at around 2,300. And that's why I think that's a very reasonable bottom. And that's why I asked you, like, do you think that the NASDAQ hyperwave ever hit phase 1? And you say, no, I think it bounced off phase 2. And I think that the Bitcoin, bubble play out or hyperwave play out, I think that it's going to play out more like the NASDAQ bubble than the 1929 stocks. And that's one of the reasons why I think we are going to stay above 2,000 and bounce somewhere in the $2,500 range, even though I will leave the possibility of 1,300. Your thoughts on that?
Well, what's critical about phase 1s and phase 2s is phase lines just cannot ever be penetrated, because when they are, it means that they weren't drawn correctly. So the fact that your phase 1 was penetrated on a number of occasions means it's not high enough. The rule is that you can't have any prices above a phase 1, and you can't have any prices below a 2, 3, 4. And the way you've got the 2 drawn works, but the problem with it is phase 2 is way too short in terms of what the prices did before your 3 started. It was basically a little bit less than a year. And the most important phase is phase 1. It's not any of the ups and then any of the downs. It's the phase 1, and it needs to suppress price for a very long period of time. Now, I understand that cryptos, and particularly Bitcoin, moves a lot faster than any traditional asset class that I've studied before, except maybe gold and silver. the percentage gains are much, much bigger for crypto. But the timing is very similar between 1971 and 1979, for example. That fits in very nicely with what we're seeing with Bitcoin in terms of the timing. That would be my only comment, is that also on your 3, the way I had drawn the 3, it was tested 11 times trying to break down. That tells me that 3 was the right way to draw it. And if you draw the 3 that way, what you're doing is you're picking up all of the bottoms in June, August, going into 2018, all of those bottoms all come down to a line. And that's why that's so important, because what it's doing is showing you that that's where all the supply and demand are coming along that line, which, again, just traditionally after I've looked at all this stuff, that seemed to be the case. That also extends your 2. It makes it longer because you're starting your 3 from a different place. So you might very well be right. Believe me, there's just not enough of these around to be absolutely certain about the way they're done. So I just try to stick with the rules I came up with and make sure they're not violated. But that 2,000 to 2,500 area, could very, very easily be very significant. To me, it doesn't matter. As you and Nick were saying, all you do is you put your best shots in using technical analysis, get the probabilities on your side, but then you've got to wait for the next tick and the next week and the next month and the next year. And a lot of people don't understand that when you draw conclusions off of a chart, like you changing your triangle, that's exactly what you have to do, because you're getting more and more evidence as time goes on. So at any one point, it's really hard to tell what the heck's going on. And we'll just have to wait and see.
Wow, this is looking good. This is looking good for a bounce right here. The volume came back. This candle was going down, has completely reversed. I'm liking this for a bounce. The bottom could be in here. I like the volume on this is a 10-minute chart. I actually like it. I would probably, if I was trading, I would probably look to take a stab at this here on a long trade. What bothers me is like all the people have already gone long, and that's a little bit scary, but that looks like a decent bottom being put in here with the volume, because all of these people that went in, well, let me not draw that. All of these people that went in, they got hurt here, and the next go up looks fairly good. Hey, Nick, so here's what I was going to talk to you about. I was going to talk to you about CMF. Oh, and by the way, I took a look at my weekly chart. I just added the CMF. I took a look at the RSI, and I forgot that I had drawn this triangle on the RSI like weeks and weeks ago. And it's really crazy how we just broke down this triangle. But we're still waiting for the RSI to come back to oversold. And when I had 2 shots at it, and I still think that we are dealing with this spike. Again, I'm coming back to, we are in the October-September period. So I
don't necessarily look at fractals on this last bear market, because it was a completely different market. The amount of awareness that Bitcoin had on it back then was completely different to now. I mean, we actually have investment vehicles being made for crypto, and it's all over the news. We have, all these ridiculous calls all over the news, and Coinbase is adding 50,000 people a day. I mean, all that matters, all that factors. But on the CMF right there, I mean, those 2 little bump ups right there should prove it, and not prove it, but should add some relevancy to what I'm saying, as that market is slightly different than this market as far as awareness, volume goes, and you know, the general news sources.
Yeah, but again, like look at how much time CMF spent in the negative.
Throw the OBV on there. Pull up the OBV on balance volume.
Sure.
So I kind of like to look at the CMF and the OBV. You'll get two different stories from it. Okay. So can you double click the OBV? This is something I've been watching since the 6,000 range. We are divergent there. If you take a look, we are still, you know, rising from that last very bottom. I'm pointing on my screen like an idiot. That very bottom on the OBV, you know, and the price is lower. So we are slightly divergent in this bearish in this bear market. And that's kind of what I mean by the bottom's been forming. I've been saying that for the last month because I've seen a number of things through volume analysis. That's one aspect of what I've been looking at, is the slight divergence from, if you go back to when we were like at your midway point. Yeah, I mean, it's divergent clearly. I wouldn't even look at it as a trend line right there. You can throw trend lines on the OBV. But in this case, you know, we are seeing a slight shift in capital flow from sellers to buyers, and the price doesn't reflect it. So that kind of tells me and clues me in that the bottom is still forming, and it is at least forming and not selling off still.
I don't know. I'm not with you on this one. Like, to me, the OBV and the CMF, you are the better expert at both of those indicators than I am. But the story that I see from the OBV and the CMF is that we're still a little overpriced here. And like, to me, these up spikes still look very similar to these up spikes here. It's this last piece of hope that we're going up until, and this is the despair phase. So I'm still waiting for that OBV to spend a decent amount, sorry, the CMF to spend some decent amount of time below the zero line. The MACD doesn't really matter, but
can I see the MACD? Will you pull that MACD up real quick?
Sure. The MACD just is not looking good right now to me.
No, I mean, it's trending down, but it also too is divergent. Remember, that blue line is the faster moving line, right? And that can still close. If we get some chop, even a little bit of relief rally, that can still close closer to our slower moving line on the MACD.
Yeah, I don't know. I like the oscillator picture is telling me that capitulation is still coming. This to me still looks like the fear phase of the cycle. So I still see the current one as like more like panic. I think this is the panic phase, and capitulation is still coming. I just hope that capitulation is the big drop to the $2,500, $3,000 area, and then despondency does not cause a lower drop. And despondency is like again, like a flattening period at 2,300, because like in his article, in George Samman's article, he did have this is capitulation in the stock market back in the 08 crash, and that is the despondency phase. That was that final push down. So in Bitcoin, we had the capitulation, and then despondency was 9 months of nothing from January into September of 2015. So the despondency phase can take on multiple forms. Sometimes it looks worse than capitulation price-wise, and sometimes it just looks bad time-wise. But I don't know. I still think capitulation is coming because, look, this move, this big drop might look bad, but at the end of the day, this drop is only a 20% drop. We fell, what, $1,200, $1,300? We fell $1,300 in 2 weeks. If we look at if I go back to the weekly chart and I magnify it here and here, and then I'll double click on that. And so look, it looks bad. What's the range here? The top of this candle is at what's the opening? 63.52. So we open at 63.50. We hit 4,700. So that is a $1,600 drop in less than 2 weeks. Now, $1,600 drop may look bad, but it's only what, a 20% drop at most? It's only a 20% drop. Now, if we get a $1,600 drop from 5,000, or if we get a $1,600 drop from like the, let's say, $4,000 floor, now we're talking the same nominal value, but now we're talking 40-50% drop. That is true capitulation. Like, capitulation is supposed to be bad percentage-wise as well as you know, the nominal value. And if we do bounce here substantially back to the high 5s or low 6s, then I think we're just going to form another descending triangle with 5,000 as the base, and then a $2,000 drop from there creates that final capitulation.
On that chart, with fear and desperation and panic and all that stuff, I still think that we have only crossed between fear and the next thing on the chart.
Yeah, fear and desperation. To be honest with you, I mean the trolls kind of went away, but I wouldn't be surprised if we bounce back right now to say 5,200 the rest of this week. I wouldn't be surprised if everyone's back in denial. You know, like.
I mean, are you guys open to the possibility that this Wall Street cheat sheet, this emotional phase, is slightly different in crypto? We trade much faster. We have a much more emotional market. I mean, a lot of people focus on these, you know, psychological cycles that we're on, and I kind of feel that crypto, especially Bitcoin, trades slightly different than you know,
well,
traditional.
no, I completely agree with you, which is why this is so much more difficult in crypto, because I honestly think because it moves so fast, we keep flip-flopping back and forth between these phases of panic, desperation, fear, and denial, like back and forth. Because crypto trades so fast, we're going to reverse faster. So we make up for that. I think that sure, we can drop, like Bitcoin is the only thing that can drop, you know, 60-70% in price. And then within the next 6 months, we're back in we're in the optimism phase, right? So,
oh, especially the news. Oh my gosh. Like one day it's, you know, we're in despondency phase with these news articles. I tweeted out an article yesterday from, it was January 12th, 2015 from Business Insider. And the rhetoric of it was almost identical to the articles we see now, talking about regulation issues, scaling issues. I mean, you could have put the date on it from now and changed the prices, and it would have been exactly, it was like a recycled article. But the news tends to definitely float back and forth depending on what they feel their readers want to see.
Yeah, no,
So,
look, I think this chart is fully accurate. I just think the difference in crypto is that the price moves so quickly that eventually we will bottom out. And when we do, we're going to start moving up quickly. But normally when things start to go up, they go up with disbelief. And if we start going up from this area of 4,200, I think there's going to be way too much, you know, optimism. Like if we only bottom in the $4,200 range, and we start trading back above 6,000, we're gonna skip desperation and skip hope and skip relief and go immediately to optimism. And I just can't see that. Like, I think people feel that they're already in optimism phase right now with this little bounce of $200 in the last 20 minutes. It's just not how things bottom. They could, but it's just not normally how they bottom.
Tone, as a follow-up to that, a couple people in the chat are still hoping.
Your audio is very choppy.
Can you hear me now?
Okay, better now.
Okay, good. Regarding exactly what you're talking about, a couple of people in the live chat are asking about, or hoping, I think is what this is more about, the backed or ETF being a potential positive catalyst. You know, that I don't believe that that's going to save the day, but what are your thoughts on, specifically they were talking about big holders and institutions pushing these as potentially being a positive catalyst and changing this cycle?
Like I keep saying, I don't see any difference between backed, Coinbase, and Gemini. I don't see any difference there. Backed isn't bringing anything new to the table. In fact, for all of the optimism that backed would bring with regulation, how do you know backed knows how to protect their Bitcoin? At least Coinbase and Gemini haven't been hacked in the last 3 to 4 years, right? So I wouldn't trust backed until they prove to me that they can last 3 years without being hacked. So Coinbase and Gemini have my trust that they're able to have very good controls on protecting the Bitcoin that they're holding. As far as the ETF is concerned, we've been listening to hope on ETF since early 2017. Guys, it's not coming. The regulators are not going to allow a Bitcoin ETF until they have a full handle on exchanges. When the last non-KYC price discovery exchange becomes irrelevant, we can then talk about the ETF. Like you're really hoping for something to happen in the future. Like I understand that traders trade the rumor and not the news. You want to get ahead of the other guy. And a Bitcoin ETF is coming, but putting on a bullish trade because of the Bitcoin ETF is like years ahead of its time. I mean, if you want to plan for the Bitcoin, if you want to beat other traders for the Bitcoin ETF, just the moment there's no more price discovery on non-KYC exchanges, that's when you want to plan for the Bitcoin ETF. I just don't see it. Not to mention the SEC, after they get a handle on exchanges and price discovery, now they got another headache on their hands. Who do they trust with safe storage of the Bitcoin backing the ETF? I think that's a bigger question mark that they have to deal with, that they haven't even thought about yet.
True, and I actually, as part of news, I think Switzerland launched their ETF, or it was an ETP today. One quick one to you, Nick, then back to you, Tyler. Nick, people are asking what your bottom prediction is.
So I am looking at that fib level close to that I talked about in the beginning of the show. If you missed it, just go back and look. But
well, actually, Nick, ironically, your bottom level is exactly my giant setup trend line.
Yeah. So there's a number of reasons there. I would prefer to write up this analysis that I'm going to be publishing and explain it that way than saying, 4,200 is our bottom, because as an analyst, you have to be open to possible scenarios. But I do feel that this 4,000 range is going to be heavily defended. Another thing to take into consideration is the news is extremely price heavy lately. The slightest little thing seems to move the price, including this beat cash noise, which should really have no effect on the price of Bitcoin. But there's a number of factors that if I say 42.72 and I end up being wrong, then you guys attack me. It's not necessarily that. I just would like to be thorough and explain my reasoning and a range. I typically don't put an exact price on there. I'll put a range. And I do believe this range that we are currently in is going to be heavily defended by buyers and the bulls.
Thanks, Nick. Tone, do you want to take some of your tip questions? Tyler, I was just going to follow up of what do you think about what Tone was saying about ETF, backs, all the news, and the fact that we are still dropping. But if you think anything down the pipeline will actually change the minds of institutional investors, buy holders, et cetera, in a positive way.
Someday it will, but we're nowhere near it, in my opinion, because adding new Christmas tree bulbs to a burning Christmas tree doesn't make it any better. And our Christmas tree is burning. It started burning December of last year, and it's been burning ever since. And it hasn't cleaned anything up yet. And until that does, any of these innovations, and I'm talking about programming and developing and lightning and all of the rest of the stuff don't matter because of all of the bad players. That's got to be cleaned up. And once it does, then what Fidelity does and what number of banks that are interested do will matter. What the SEC approves will matter. But the cart is way, way before the horse, and they've got to take care of the regulatory climate. And it's very easy to do, but they won't do it. They won't do it quickly. They're doing it piece by piece. They'll take down this exchange. They'll pick off the low-hanging fruit, and nothing is really changing. Until all that changes, prices continue to go lower. And how low, nobody knows, but not after 2 weeks. Not after 2 weeks. We got out in December. We've been out ever since. I've made 2 trades in the crypto world, one long and one short. I'm waiting for the next long. And I think it'll come sometime towards the end of next year from much, much lower prices.
Wait, Tyler, I got to correct you. You didn't go short, you went to cash. You didn't go short.
I thought I said I got out.
No, you said you went long, then you went short. I'm correcting you. You went to cash.
Absolutely. Went to cash. I would never short Bitcoin.
Right.
So the 2 trades, one in, one out. And yeah, because I'm not a trader. I don't really care about all these areas of support and resistance. All I care about is the long-term trend, and all the tools that I've got and I've used identify long-term trends. Consensio, that's all it's good for. It's not good for very short-term trading, even though we worked with Bloomberg on a tick-by-tick basis with 125 different ETFs that we were either long or short all day long, tick by tick. So it works at all time levels. It's just that in institutional investing, nobody's a trader. Traders are those that the institutional investors use to get into and out of positions. But the institutional investors don't care about that. We've got a 2 to 5 year time frame on these moves. And so for Bitcoin, basically you've had a total of 5 trades in 10 years. From an investment point of view, you caught the first up, you got out. You caught the second up, you got out. You caught the third up and you got out. And you're still out and have been for 10 months. At some point in the future, there will be evidence that we have seen a bottom. I'm not going to try to catch the bottom. I could care less about the first 10, 15, or 20% of the move off the bottom. But I'm not going to put client money, and certainly not my money or family money, into a position guessing that this is the bottom, or this is the bottom, or this is the bottom. That's what people did between 6,000 and 10,000 over and over and over again. And what the criticism was is, oh, Tyler, you're out. That means you missed this move up to 10,000. Yeah. Tyler, you're out. You missed this move to 8,500. Yeah. Tyler, you're out. You missed this move to 7,500. Yeah. But I'm out. And now we're sitting at 4,800, 4,900. And that's the point, is it's not jumping in and out. Now for traders, that's a different thing. Speculation, short-term trading, and making money in both directions with short-term movements, but that's a different world than my world. I was a commodity pool operator for a number of years, and we traded 42 different commodities, long and short, every day, using all the technical tools, and I loved it. But that's not what Leah and my message is to people that want to listen to us. All we're interested in is the long term.
Hey, I got a question real quick. You had said you expect a bottom next year or whatever, and or a rally out of it.
Yeah.
You said a rally out next year.
No, I'm saying that I expect a bottom, a final bottom in Bitcoin sometime next year. The
Okay,
problem,
and how
yeah,
long do you think we would stay down there for?
well, anywhere from a V bottom to 4 years.
Okay,
And I
yeah.
showed a bunch of charts the other day that shows just that. When you finally get to a bottom of a hyperwave, and I think this is a particularly special one because of the fundamentals behind Bitcoin, that I think we could get a V bottom, and it could be very, very explosive. And you and everybody else has techniques to find that when it starts. I do too, but I'm going to stay out until I see that.
I'm also looking for a V bottom sometime next year, but I don't know if it's going to be in January or in December of next year because that's a long range.
Yeah, it is.
I think if we drop down to these, we're going to call them cataclysmic levels that you guys are identifying, I think we stay down there 4 years. Yeah, I can agree with that, but I also don't think that scenario is likely. But if it does happen,
I'm in the opposite boat. If we do go down to those cataclysmic scenarios, I think that's the V bottom. I think that if we don't go to those levels, if we get stuck between 3,000 and 4,200, that could be the dragged out low. So if we do fall below 3,000, that's my V bottom knife catching scenario. I don't think we're going to stay below 2,000 for longer than 2 weeks.
Why?
Because I think because people like me will go and sell the house and buy Bitcoin. Like
I don't think anybody would trust it from 20,000 down to 2,000 or whatever.
Well, that's the point. Exactly. And the contrarians will. This is where people like us will go up and buy it because we understand the fundamentals of Bitcoin. We know it's not going anywhere.
I still feel it's kind of a retail market right now, though.
Well, right now it is, but they're all going to be out. They're all going to get wrecked by the time it goes down to below 2,000. And the only people that are left are going to be the people willing to sell you the car and the house to go buy up Bitcoin at those prices, which is why I don't expect it to stay down there longer than a week or two. But yeah, but if it stays in the $4,000 range, we can see that going into 2020. If we never fall below 3K, if we right now if we do fall to your level of, let's say, 4,200, I can see us getting stuck at 4,200 until people say Bitcoin is useless, it's not going anywhere, and it's this dragged out thing between buyers and sellers going into early 2020 to where the halving hype will finally get us out of the, the dreaded flatness and no volatility of 12 months.
Now, just as a follow-up on that, and then I do want to get to the tips questions and also hear a little bit more from you, Nick and Tyler. People are always asking about how the halving is going to affect this. You've actually been responding to some of your trolls recently, Tone, about the halving changing up your price predictions. You want to just add a little bit more? And Safety always talks about how store of value for Bitcoin is so much influenced by the halving that's going to be coming up. I can see that your face is thinking, so I'll just stop right there.
It'll be quick. Look, guys, the halving is so far away at this point. There is nothing you can do. You can't trade the current price of Bitcoin in anticipation of the halving because it's so far away. The time to start planning for the halving in your trading is going to be 6 months away from the halving. So first you have to find out where the halving is, because remember, Bitcoin, the hash rate on Bitcoin dropped severely in the last couple of weeks. First, it was the Bcash fork taking Bitcoin's hash rate and moving it over to defend Bitcoin ABC. That dropped the halving. Then there was also the whole Chinese mining thing where a bunch of Chinese miners apparently have shut down. That dropped the halving. If the price continues to drag here at the lows, several of the miners are going to start to shut down. That's going to affect the halving, right? So all of these predictions of when the halving is actually going to be, that can change by several months leading up to it, you know, especially if the hash rate drops. And you can start thinking about the halving as far as your trading is concerned approximately 6 months before the event. But even then, you have to be very careful, because if the price rises too early on speculators in anticipation of the halving, it can actually already start to crash before the halving happens. Just look at it last year. That's exactly what happened. And then if people think, and if the price of Bitcoin is kind of low, the psychology of the traders are going to be, oh my God, the halving is coming. Now the miners are going to make half as much money, and the price of Bitcoin is still not going up. This means half the miners are probably going to shut down because they won't be able to afford the electric bill. So don't automatically assume that the halving will raise the price of Bitcoin. It will really depend on the price of Bitcoin leading into those final months before the halving, and the psychology of the speculators may go one direction or another. Right now, I don't think about the halving at all. It's too early.
All right, let's hit these tipped questions. Unless Tyler or Nick, you guys want to speak about the halving and how it's going to affect prices as a follow-up to Tom?
I'm good with
I don't
Tom's
care.
explanation.
I don't care. Can I touch on something real quick? There's a lot of chatter about XRP and people asking me about it. Look, XRP is centralized, right? As a trader, I really don't care. Centralized, decentralized, whatever. But I try to look at XRP and Stellar as a company and not so much a cryptocurrency. And fundamentals matter a little bit more to that. But I am very bullish on Stellar, full disclosure, just so you guys know. That's it.
All right. I mean, I think they're both scam coins, but yeah, I see them both.
They're a company. They're not a cryptocurrency.
Yeah, they're not a currency, period. They're a company. Yeah,
that's how I look at those two assets. It's not so much trade. Fundamentally, they're very centralized. So they're a company in my eyes, not a cryptocurrency like Bitcoin.
So then why are fundamentals not talked about more in this space, right? I mean, it like actually does drive me a little insane, right? Like when you buy stock in Apple, you're not buying the iPhone, right? You're buying Apple as a company. Yet, like we talk, no, don't get me wrong, Nick. You slay at trading these coins, but when we talk about
I get it. Fundamentals just matter very little when it comes to trading because of how emotional the market is. If we based everything, the market caps on everything's fundamentals, well, geez, we might be down to like a very small market cap right now. Everything is very speculative and years in the future as far as alts go. But yeah, fundamentals just seem not to matter because it's a 24/7 market. So everybody's really focused on, the next hour, the next day, and not so much long-term of an altcoin and their fundamentals. But yeah, if you do look at it like a company, like I do with Stellar and XRP, Stellar is a longer term trade for me. It has been. I've been in it since under a penny. I had sold at 90 cents last time and been building a position since then. But yeah, there's a few of them that fundamentals matter more, like Stellar and XRP, but generally everybody's so short-sighted that they only want to focus on the technicals.
True. Well, and usually it's just a crappy white paper that's been copied and some kids running around that I'm just kidding. Okay.
Yeah, well, what fundamentals too? Like what, a white paper? That's not really fundamentals. Like you don't have a balance sheet. You don't have any of that stuff to look at. So
exactly. All right, Tone.
Yes.
Your phase 2 line, 2,300 price low enough to kill the scammy alts and cleanse the space, or is 1K more likely to be enough to send alts to zero?
I think a $2,000 Bitcoin is enough to kill the alts. I really do. I think they're already on the verge of dying. I think regulation is already killing the alts. I just think that too many people are gonna get a slap on the wrist, and that's unfortunate. And I'll even pull it up. It's well, like he's been doing a lot of good stuff on Twitter. Let me do a very quick screen share. And again, this is my battle against Binance. So this is Larry Cermak. I guess he's a lawyer. Maybe I should get him for my law show. And he recently did a huge write-up about Binance. He tweets a lot. I kind of stopped tweeting. I have too many trolls. I'm surprised he has so little followers, but he did this whole thing on Binance. Man, okay. It was just the other day. Man, hold on. Couldn't have been that far ago. Yeah, this is it. This is it. This is it. So here's his. He wrote a big article about Binance, and he had this big tweet storm about Binance. And again, he's a lawyer talking about how they're going to crack down on the ICOs. And then his third tweet in the series is like this. Binance raised 15 million in an ICO. Right. That's the scam, right? They created their own money out of thin air. They created an unlicensed security for an exchange that didn't yet exist. They have no customers. They have no clients. They had nothing. And they raised 15 million with their Binance token that is totally useless even today, just like Ripple. They just come up with an excuse to have it just because they needed money to open an exchange. So to me, I don't understand why other exchanges that did not print their own money aren't up in arms and telling regulators, you need to go shut this down because we can print our own money also. And now you created the regulation. Now we want to go and print money, and now we get arrested, but these guys got away with it. So to me, Binance cheated. They printed money out of thin air to build their exchange. I don't care that it has the best technology out of all the other exchanges. They cheated to get there. And that's my problem with Binance. And he seems to acknowledge it, but doesn't seem to acknowledge it as a problem. And to me, that's a problem. Not to mention, Binance token is still a security. Now, the slap on the wrist would be, CZ, we know you created an illegal security. You broke the law. How about we restructure your ICO into an actual security now? It's okay. There's no fine. You don't have to shut down your exchange. We know that you cheated and you wiped out your competition. How about you just turn it into a security now? I think that's ridiculous.
Interesting. Yeah, Tyler, what are your thoughts on this? We often talk about when alts will go to zero, or at least the majority of them. What do you think about that price prediction and what Tone is talking about now?
Well, I have no evidence, no proof. It's just the sense that I have that that until the vast majority are taken care of by one or two fell swoops by regulators through either legislation or by a general cease and desist, all at one time, that Bitcoin is not going to be able to recover, and that the rest of the cryptos are going to go to zero, one at a time, 5 at a time, 10 at a time, in ever accelerating way. The longer it takes for the regulators to say, starting Monday morning, all ICOs and all alts not on this list, and the list better only be the size of a 3x5 card, must cease and desist, and you have 30 days to register, or we will take criminal and civil action against you. At that point, Bitcoin takes off, and that's the end of the bear market. Until that point occurs, we're just going to see more of this same, just lower and lower and lower. And it deserves it. The whole crypto system deserves it. Enough people made billions of dollars off of unsophisticated investors jumping in on every new deal, getting extra coins, getting airdrops, getting all kinds of great parties and, lots of balloons and whistles. But that time should be behind us now. let Bitcoin do what Bitcoin can do, which is a macroeconomic shift in the way finances work. And we can't do that, and therefore Bitcoin has absolutely no reason to be until it can finally do what it was originally designed to do. And that's my thought on the situation.
So, I dollar cost average from January to April. Should I start doing the same starting this month? $5 tip. And that's the last year tips.
I mean, I'd be okay with that. If you're going to dollar cost average starting like right now in the 4,000s, I'm okay with that.
Tyler?
I would agree that with that too. Just be sure you do it in small amounts and regularly, every week or every month, every paycheck, but keep it small, because you saw what happened between January and April, dollar cost averaging. You've just lost 50% of your money. Why? Because you started too early. You don't dollar cost average from the beginning of a bear market. We are no longer at the beginning of a bear market. We've gone 10 months through it. So this is a good time to do it. So if you were putting $100 a week from January to April, then you should be doing $200 or $300 or $400 a week now, because as we get closer and closer to the bottom, that's going to pay off big time. It's a great strategy, but you've got to be very disciplined about when you start it, and you can't stop it. You can't get afraid, and you can't sell when you get bounces. You just keep putting money in.
Thanks, Ty. Tone, question from one of your workshops. TI Sanity. So it was 4,600 was the last strong resistance back in September 2017. Is this possible support and a bounce point? He said he would argue yes.
Well, to me, 4,900 was, right? So my next level, am I still sharing screen? I am. My next level, right? So I have the setup trend line, which is relevant, right? We had a red setup trend line right there at 8,800, and we could not break it to the upside. These big setup trend lines are actually pretty useful. And my next one is at like 4,150. If we blow through this level here over the next several weeks, I think 4,150 would be an excellent turnaround area. But other than that, other than looking at this 4,150 line, and that's in line with Nick's the 4,200 price Fibonacci. Other than that, your next levels are the 200-week moving average, currently sitting at, well, will be sitting at about 3,200, and the triangle target of 3,000 flat, maybe a smidge lower. And if that area doesn't hold, then there's open air down to 1,300. There's just nothing there. Like, you're literally hoping for a random reversal, kind of like what happened with the S&P 500 back in 2009, where the S&P reversed from a beautiful round number of 666 points. And that was totally random and in the middle of nowhere, and no TA could have predicted it, because that number did not have any kind of technical barrier on that number. So I have a couple of, like I said, I have a couple of points here that will help me identify a low: 4,150 to 42, 30, the 200-day, which is a little dynamic, and then the 3,000. But between 3,000 and 1,300, any number is any guess is as good as mine from that area, because I have absolutely nothing in that zone, just nothing.
Okay. Nick, any thoughts? And then, gentlemen, if you want to do a little on the S&P, I mean, the markets were insane today, and at least you got a couple of comments, but also a question to look at NVIDIA. But true, Nick, you have a slightly different chart, or just any thoughts on that question?
Say the question one more time. I'm sorry.
Ooh, good question. Oh, got it. Nope. Oh, okay, yeah. So it was 4,600 was the last strong resistance back in September 2017. Is this possible support and bounce point?
Yeah, this is a support level. Obviously, I think we range within here, but you know, support levels are meant to be broken sometimes, and I still think we get a wick down even further, but I think we range for a while.
Nice. All right, Tone, S&P, we got it.
S&P looks really bad. I'm really disappointed. I really thought the S&P can break out this morning. It's Monday over there where you guys are, right?
Yeah.
So I really thought that, I mean, if the market doesn't reverse by Wednesday, we could be looking at some substantial falls in the S&P. I'm still hopeful that we can reverse here until we fall below last week's low. I'm going to stay hopeful, but once we fall below last week's low, that's it. And the thing is, a bear market in the S&P 500 hurts Bitcoin a lot. I think a bear market in the S&P hurts Bitcoin because remember, a lot of the speculators in Bitcoin are traders. They're speculators in general. And when the market starts to fall, people feel poorer. And look, we can talk about the world all we want, but let's be honest here. 80%, if not 90%, of everything Bitcoin is coming out of the US. That's where all the money is. That's where all the speculators are. I don't care if all of these exchanges say we don't use US customers. 80% of their traders are US customers, okay? It's just the reality of the situation. All the money is in the US. That is why all of these ICOs, they claim they want nothing to do with the US, but secretly they are trying to throw all kinds of money at influential people just so they can quasi sneak in US investors, okay? All the money is coming out of the US. So you have to look at it from those eyes, okay? Until the US dollar is no longer the world reserve currency, until the US government falls apart, all the money is going to be here, okay? And so if the S&P goes into an actual bear market, you got a problem because a lot of the people that have been buying into Bitcoin were people that have been getting rich on the stock market. And if they are now getting poorer on the stock market, they're not going to be very eager into buying into other speculative assets. So the drop in the S&P 500 is going to hurt Bitcoin because people in general are getting poorer. If the stock market is doing poorly, that means corporations are doing poorly. That means your job is you ain't getting no raise, and you may not even be hired if you're looking for a job. You may even be let go from your company if your company isn't doing well. Company's not doing well, the company's stock goes down and vice versa. So the drop in the stock market actually hurts Bitcoin for a more extended bear market. It's not good news.
Thanks, Tone. Tyler, what are your thoughts on also, as a follow-up to Tone saying correlation with Bitcoin prices?
Well, this is by far, you know, the most important market in the world. And there's $23 trillion in mutual funds, 23 trillion. The entire crypto market is now at about 160 billion. So we're all come from an interest in the crypto market, but this is the one that my clients are interested in. This is the one that all the pension funds in the United States are interested in, all the municipal ones, all the colleges, all the government employees, all the military. This is where all the action is. And it is not looking good. I agree with Tone. We have gone from being 100% invested to 85% long on 3 different occasions this year. We're now at 50% in cash, and we have not done that for 10 years. Again, as I was talking about before, I'm only interested in the long-term trends. And this trend, step by step, keeps deteriorating where I expect it not to. Today was very, very disappointing. And it was so disappointing that I'm getting orders ready because not too much lower than this, and we're going to completely step aside like we did in 07, 8, and 9, and just wait 3 years to get back in. I think if this thing is actually rolling over, then that's all people will be talking about for many months, quarters, or years to come, not just in the United States, but on a worldwide basis. The thing that I've loved since I first got into Bitcoin, meaning trying to understand it, what it was going to do, is it's one of 4 solutions to the problem that is so difficult for everyone to define, which is this tremendous credit and debt around the world that cannot be paid off on a mathematical basis. So there's 4 ways out of it. Number 1 is you default on the debt. That's the worst possible thing that can happen. Number 2 is you grow your way out of it, which it looked like we were doing under Trump, but here in 2018, we've stumbled 3 times badly, and this still isn't the worst. This isn't as bad as February of this year, but there are parts of it that are already worse, and that's what I don't like. We've got about 150 hyperwaves going on with individual securities, and if they start breaking down, then that means that not only the Russell 2000, but the NASDAQ and the NASDAQ 100 and some of the mid-cap indexes, commodities are breaking very badly. We are going lower and lower on gold, silver, oil, lumber, and copper. And those are usually leading indicators for economic weakness. So I am very discouraged today and very disappointed that we might have to get even more defensive than we've been. And I hate being defensive in a market that I thought had another 2 or 3 years to go to the upside.
Tone, you brought up Amazon.
Amazon looks bad. Google looks worse. Apple looks bad. The tech stocks look like a disaster. But they could bottom. Give it another few days, right? Like there's probably divergence on this one if I pull up the RSI. Maybe not. I take that back.
Yeah, Netflix is in a phase 7 of a hyperwave. It's not coming back.
Yeah, I wonder, I guess people are watching less TV. Tesla is holding up well.
Yeah, Tesla's looking good.
The shooting star candle is something that would make me nervous a little bit, but oh yeah, Facebook's done. Jeez, what a disaster. I wouldn't be surprised if if Facebook keeps going down further, man, somebody might buy them out. They got a lot of data that some companies are very interested in. AMD is actually holding up because it dropped a lot.
Yeah, look at NVIDIA.
Oh boy. Oh boy. They report earnings. That didn't go too well, huh? I'd wait another day. Could close the gap. I wouldn't be surprised. NVIDIA looks a little oversold on a technical perspective. I think it's due for a bounce. And then we'll see. Not a reversal candle on this 9. I'd wait. I'd wait till tomorrow. Remind me that later this week to look at NVIDIA. That's an interesting one. Yeah, we called the bottom in Ford after. See, this is what you want to see, right? So it makes sense. You know, Ford still makes fairly cheap cars. And the stock got beaten up really badly. And their cheap cars might have some nice sales going on. Not everybody can afford a Tesla. Ford is actually holding up very well right now. I think this is that marijuana stock. It's actually also holding up pretty well, but it's totally neutral right now. Nice 9 at the lows off the setup trend line.
GE, they should take it out and shoot it.
GE, yeah, GE is done. This looks bad. It looks bad, about to get worse. I don't know what TSG
Massive
is.
dividends cut too.
Yeah. TSG looks like it's holding up okay. Nice little 9 here at the low, definitely tradable. And not sure what box is, but whatever this is, it's not looking good for box. But I don't know how much lower this thing can go. It's already, you know, close to its all-time lows. Well, maybe not.
Box is cloud sharing company.
Yeah. So, oh, hey guys, I saw that pop up. Since I'm on, if I go to Tone Vase, so on the affiliate section, obviously all the exchanges are gone. And hey, TradingView, if you wanted to get that, you know, paid account, 60% discount, Black Friday. So later this week, might want to pick up the 60% discount TradingView account. Please use my affiliate code. I mean, it's a way to support my channel without actually paying anything by using the affiliate code for TradingView or VPN. So there you go. I need to add a couple of more here, but like to be honest with you guys, none of this actually pays all that much. Actually, this doesn't pay at all. I don't take any money from the clothing stuff. That's just like helping out friends that sell the clothes. Same thing with the watches. That's just discounts for you guys. I don't take any money from that. The only one that was actually making money was BitMax. So, oh well, there goes that. And yeah, the workshops, people are signing up for Aruba. That is great. The Aruba one is going to be a lot of fun. Especially with the prices of Bitcoin dropping, I'm probably going to go to a webinar model the way Leah and Tyler do it, because these venues, you know, they're not cheap, and organization-wise is not cheap. And so we might go to a webinar model to make it cheaper on my end, as long if you want me to keep the same price or the price goes up. Brisbane is sold out, but we might be able to add a couple of seats. I think some people registered but haven't paid yet, so those people will be dropped, and maybe we'll open up 3 more seats. So if you're in Australia and want to come to the Brisbane workshop, we will try and work that out. Maybe 2 or 3 more seats available. That's it. And don't forget the conference. Nick's gonna be there. Tyler, Leah, we're all playing in the poker tournament along with Dark Poke, and we'll be there. And it will be great. We got how are the registrations going? 20 seats left on the poker game for the general public, and tickets, 36 tickets left at this price, and then price will probably rise. You're getting a nice discount with Bitcoin dropping, so keep that in mind. All right, that's about it for me. I'm gonna go ahead and stop screen share, and Leah, close us out.
All right. Well, that was a lot of fun. Nick, thanks for joining. Tyler, Tone. I mean, this was really cool. A little learning of all the different minds. But yeah, Tone. Well, I'd start with you, Nick. Nick, thanks so much for joining us today.
No problem. Thank you guys. Appreciate it.
And everybody's been asking about where to follow you and if you have a YouTube. So we just you know, help me out on this chat here.
No, appreciate it. So I did just start doing YouTube stuff before. I just kind of throw out some random video that really wasn't even worth watching here and there. But I am going to start doing it like 3 to 6 times a week. It's really not going to be any fluff, just pure analysis and insight, mainly with me and some of my the other traders that I trade with in some of these groups that I run. And yeah, we'll be doing a show tonight. But you can click on my name in the chat and do it there, or just go to my Twitter, which is crypto_core, or just search Nick Core and it should bring it up. And like all my announcements, publications, I pretty much centralize there. I'm on a number of sites, so if you pay attention there, you can see just about everything I do.
Nice. And Ty, thanks for coming on. Sweet sweater.
Great to see everybody. Nick, good to see you, and we'll talk to everybody tomorrow.
For sure. And Tone, Aussie land. How long are you still there for before you sign off?
Well, tomorrow I'm leaving Sydney tomorrow off to Brisbane. Oh, I want to give a shout out. I had an amazing steak over at this restaurant called Rock Pool. Sommelier, I can't even pronounce that word. You know, the wine connoisseur at the restaurant.
Oh, yeah.
So it's like the most expensive restaurant. The wine connoisseur's name is Alan. He recognized me as I walked in. So that was awesome. And also a shout out to Saitel who took me to that restaurant. Thank you for the dinner. Huge shout out to Alan who was very nice to us. Gave pointed out some really good wine that we had with the meals. So it was great. It was thank you so much. Looking to come back.
Nice. All right. Well, I can't wait to be in Vegas with all you guys. I guess I'm shilling Rodolfo here for since we're all Bitcoiners, I'll just end on the fact that this shirt pretty much started it all. All right, everybody, have a great day. That was a lot of fun. See you later.
Bye, guys.
Bye.